What's good, everyone? Let me know how the audio is. Good morning, good morning. Happy Sunday. We'll get started at 1:45 or around there. Let me make some announcements and I'll get back to you guys. One moment. All right, all right. Should be all right. Should be able to hear me. Yo, what's good, Matthew? What's good? What's good? Farazad. Over here, it's 1:45 p.m. in the United States. Just making some final announcements. Got to make it on Instagram. Make sure we are good to go. We'll get started shortly. Thanks for tuning in for those of you who are here. And I don't think there's going to be any internet issues today. I think we're good because today I am outside, not in my room, which, funny enough, I get better internet in my backyard than in my room, but it is what it is. Not in my room, yard than in my room, but let me change this. Let me change this. Hold up. Hold up. Hold up. We're gonna get started at all right, 150. Sweet. Please, sir, make it quick, less than an hour. I'll try. I'll try. That's the goal for these, but they always end up going for more. But that's the goal. Once we get started, try to do it concisely. No promises. All right, I think we're good to go. How are y'all doing in chat? How y'all doing in chat? Everything good? Screen good? Audio good? Are you good? Did you have a great weekend? Did you have a good trading week last week? A bad trading week last week? A mid trading week last week? So let me know how y'all are doing in there. Let's get active in here, baby. Can you share watch list on Discord? I believe it's already there. I believe it is already there in frequently asked questions. If you go there, you should be able to see and copy the watch list to yours. Do you always use SMT when you trade? No, sir. No, sir, re-TV. I don't require it. It's like a nice confluence. I think of it as like a cherry on top of my trade. BTC predictions. We'll get into it. We'll get into it. Year was good, MHR. Was good. Past 4 accounts and 1 payout. Holy crap, LS trades. Nice, bro. Nice. What's up, bro? Ski. What's up, Aki? Just waiting for some more people to get in here. Made some final announcements. Just waiting for the stragglers to tag along. And then we'll get started. Because then I'll get 50 questions asking me, what was your dollar outlook right after I finished dollar? So it's gonna just wait a few moments here. Stepped away from the charts and spent time with my aging parents. That's always a good thing. It's never a bad thing. Good stuff. It is always good to unwind in trading. Hope you had a good time with them. Jag. What's up, Mama? I don't know how to say. Muhammad. Something like that. Yes, it is true. Futures do not have spread like Forex do. Absolutely true. That's why I love futures and I've pivoted over to them fully. What's good, Omar? What's good? What's good, Sharon? What's up, Ninad? Nice to have you here. Please make it quick. Less than 1 hour is the entitlement. I get it. I get where they're coming from when he says that. I know people are busy. But yeah, whatever. It is what it is. Now I cannot speak Amharic. It's Muhammad. Okay, yeah. Sweet. There we go. All right, so let's get into it. I think we're ready. Let's stop yapping here and let's dive into it. So let me pull up the economic calendar real quick so we can go over that first. That is always the first thing we want to do when holding our forecast, right? If you're doing this on your own, say you're holding your own forecast, you would just first off look at your economic news calendar right here. If you're wondering where you get this from, you get this from forexfactory.com. All right, so let me toggle chat off here for a second so I can focus, and then I'll check up on you guys' questions after the forecast, because right now we're going to start getting into into the good stuff here. So first thing we want to do every week is look at the, like I just mentioned, the calendar right here. Economic calendar. It is your roadmap for the week, and it will set you up, right? Build expectations on what days you can expect not to trade, what days you should not trade and avoid, and very key times which you do not want to be interacting with the market and you want to be waiting until after. Or days which are just going to be lethargic because they lack red folder news. Why? Because news equals volatility. It's injecting that energy into the market that price needs to move. And as traders, we capitalize, at least with the way we trade around here, the way I trade, on energetic price action, on trending conditions, on expansions. Why? Because how do fair value gaps form? Because I only trade fair value gaps. That is my best friend, the fair value gap. Fair value gaps, the only way a fair value gap can form is with expansion. So that is why this economic news calendar is very, very important as well. So let's dive into that right here. On Euro, we have red folder news at 3 a.m. right here. Great for you intraday Euro traders. Should be nice. GBP as well. USD, red folder news at 9:45. Also great, great, great. So this is a Monday that I would be expecting pretty nice price action and to potentially place trades on. In the past, you may have heard me say I don't trade Mondays. And that is because typically Mondays won't have red folder news. They lack it. So this is a different type of Monday. We have plenty of red folder news here. This should be a nice trade in terms of a nice day to trade in terms of price action. We have that volatility. So now let's go on to Tuesday. We have GBP red folder news at 2 a.m. again, and USD red folder news at 8:30 a.m. Just core retail sales. This should also be a very nice day to trade. Monday and Tuesday looking good. Wednesday, GBP CPI at 2 a.m. If you're intraday trading GBP, wait until after that CPI news has released. For USD traders, we have FOMC at 2 p.m. right here. Now, FOMC is what I consider a big three news event. Big three news events are FOMC, NFP, CPI. Just very, very volatile and impactful news events in price that you want to be very, very cautious of and not be trading prior to it or during to it because of that slippage that can occur due to that large volatility. Meaning, if you set a stop loss in the market, you're likely not going to get stopped at that level. It's going to be a big surprise when you check your P&L that you're down 5 times what you expected if it goes against you. All right, so that's pretty much gambling, which is why we don't avoid that. Which is why we do avoid. Sorry. But we have FOMC over here at 2 p.m. I will be waiting until after that. So I won't be trading the AM session. I will be waiting until after FOMC. If there's anything nice, I will look to trade the PM session. If there is just garbage after that, I'll just be totally content avoiding this entire Wednesday. And then Thursday, looking like a great day, 7 a.m. red folder GBP news, and then 8:30 a.m. USD 8:30 news should be great. And then more USD red folder news at 8:30 right here. So every day this week is looking very nice. We have red folder news every single day. So looking like a very promising week in terms of high probability trade days, except Wednesday until after FOMC. So not bad. I like this week's calendar. Look good. All right. I just took a glance at chat and don't know what languages are being spoken there, but sweet. Anyways, let's go to dollar and let's start from the beginning right here. Let's remove everything we have so we can approach this chart nice and fresh and get to an idea, right? The first thing we need to establish, well, before I get into that, the first thing we need to understand is why we're looking at dollar in the first place. Dollar is the world reserve currency. It affects pretty much everything else that we're trading. It affects all the foreign currencies, the indices, commodities, all of that. All right, so we want to look at dollar because it's going to have an impact on the rest of the market, and it helps us set an easier bias and expectation when looking at all the other pairs, right? Because if dollar's bullish right here, we can expect all of these majors to be bearish. for these currencies to be bearish right here. Sorry, we're looking at these. Let me clean stuff up right here. We're looking at these currencies right here. A bullish dollar will mean bearish currencies, which is why I mark that up green. All of these are going to be red. Bullish currencies will be red, bearish. All right. So now let's go into this dollar analysis, because now we understand that is the first thing we should look at on our forecast. Now, what is the first time frame we should look at? The monthly chart. We're always starting on the monthly chart. We want to obtain our bias from a top-down perspective, and the monthly chart is the highest time frame I begin with to start finding the answer to that question. Where are we heading towards? What is price going to do next? So on this monthly chart, let's observe some of the recent price action we've seen right here. We have a monthly breakaway gap created right there. Let me mark that up. Monthly bag. Bag stands for breakaway gap, in case you didn't know. We have a new potential monthly fair value gap being created. It is in the current process of being created. Once this third candle closes right here, we will have a new fair value gap. Now, what happened over here, if we look a little towards the left, what happened in this previous candle, right? We can tell a lot from just one candle. This candle rejected this monthly swing high, forming a rejection candle, right? We're respecting this premium array. Inside of this wick right here, we're likely going to be seeing a lot of, or we're likely going to see fair value gaps displacing lower, right? A lower time frame impulse shift. Meaning over here, it was a bit 50-50, because once we go down to the weekly, you'll see why I mentioned it was 50-50. But currently, we're not pushing lower, right? This next candle, if you wanted to move lower, it would have started pushing lower already. Currently, we're starting to see that lack of intention to want to move lower, and currently just expanding higher right here. And that would be off of this weekly fair value gap right here, which we'll get into soon. But if price does want to continue pushing higher right here, and it's creating fair value gaps right here, it's in the process of creating a new fair value gap right here. The next premium array we can potentially target would just be that previous month's high. All right, so on the monthly basis, I'm seeing more bullish arguments right here for price than bearish, right? So I'm going to hold a bullish monthly bias right here on dollar. Now that we are looking at this potential monthly high, previous month's high, as a potential drawn liquidity, we have to identify how are we going to get there this week. What PD array can we use? We don't have that on the monthly, so we can go down to the weekly and start looking for fair value gaps to work with here, right? Because we need fair value gaps to tell us what order flow is doing. And what do we see right here? We see the weekly fair value gap. So if we're going to move higher, we're going to likely move higher from here, giving us clear weekly push context. Push context is simply internal to external right there. So perfect. This looks great right now in terms of what to expect on dollar. We are quite bullish. Going down to the daily, we had this daily fair value gap right here, which was what I was talking about in that big monthly candle, that rejection candle we saw. This is why we saw that rejection candle. We were forming daily fair value gaps to the downside. So over here, it was very 50-50 in terms of what was price likely going to do. We had a weekly gap, potentially pushing higher. We had that monthly getting respected, creating daily. So this whole area I avoided, saw it as 50-50 conditions. But now let's see what's happening. What's the latest story on price? Who's winning the arguments right here? Well, now we are sweeping discount arrays and creating new fair value gaps off of that. We are disrespecting premium arrays, closing above them. And we are pushing off this weekly gap. So just like we saw, who is winning the tug of war right here? The bulls are. The bulls are. So this is looking quite nice for higher prices. I would like to see higher prices on dollar this week. Let's look at the 4-hour, because this right here looks like a breakaway gap based on how we're already showing intention to push higher, as well as we do have a breaker right here. Let's take a look at the 4-hour, see if there's any gaps there. And we don't actually have any fair value gaps at the moment to work with. We do have this previous day's low, which is also this 4-hour swing low right there. Really nice because this is just a low probability leg off of this 4-hour gap. We are in nice 4-hour bullish order flow. Any moves below old lows, I will view as a stop hunt to potentially move higher, right? And this would align with that previous day's low idea. Also, we are sweeping previous day's low, or previous day's high right here, going back to the daily. So respecting that premium array, sorry about the long white line there. We are respecting this previous day's high. We're likely going to see previous day's low right there to then potentially move higher off of that, right? That's the daily idea, but on the 4-hour, it would just be some pivot context off of this low probability leg, expecting higher prices on dollar here. So could look something like that. Could be interesting on dollar. So that is that. I am bullish, right? So let's mark that up on green. It's already green. Makes all of this analysis right here very easy on these currencies. On Euro, GBP, AUD, NZD, CAD, CHF, JPY. All going to likely be bearish. Okay? So let's first dive into Euro. Same thing. Starting from the monthly. Now we're going to go a little bit quicker now that we know what we're doing and we know the process, right? So let's start going through these. Let's delete everything. It'd be the same exact thing, inverse of dollar, pretty much right here. Remember, monthly breakaway gap right now. Potential monthly gap getting created right there. And what is a discount array we could potentially draw to? It's the closest one. Previous month's low right here. We can hold a bearish bias on dollar. If we want to move lower down towards there, where can we move lower from? Well, let's answer that question on the weekly because we can't answer it on the monthly. So let's go to the weekly and we get the answer to that question right here with this weekly gap pointing lower. Perfect. Weekly push context right here, just like we saw in GBP. We can see it on Euro. Sorry, just like we saw on dollar, we see it on Euro. Same exact thing, but inverse. Now we have our context, and now we're simply looking to play daily for value gaps lower, 4-hour for value gaps lower. Pretty easy from here. Now if we go to the daily, we don't see any 4-hour or any daily gaps right here. So, all right, that's fine. Let's go to the 4-hour, see if we have any there. And again, we actually don't have any 4-hour for value gaps right here that we can play with at the moment. At the moment, this looks like price is going to seek this high, potentially this high. We actually created a bullish 4-hour for value gap. So it's not really what you'd want to see. I want to see this start getting back in line with that bearishness. So if we can sweep this and start creating 4-hour for value gaps lower, that would be nice. So I'd be waiting for that overall bearish bias on Euro. If you go to 6B though, we'll see already it's a lot weaker on that 4-hour basis. Now starting on the monthly, what is the closest premium or discount array we could draw towards to? That would just be previous month's low. Don't really have any for value gaps to work with here, but we are moving lower right now. This candle looks like it's reaching for there. So we have a bearish bias on the weekly. How can we get there? Same idea, weekly fair value gap, push context to the downside, just like that, IRL to Euro. And you'll notice that, like we just saw on the 4-hour, like we can see on the daily even, it is looking weaker in terms of how we are displacing away from there. So 6B is looking interesting. Daily breakaway gap right here. Let's mark that up. Daily bag. Okay, sweet. Now we don't expect price to come up into that. Let's go to the 4-hour because we can already move lower off 4-hour fair value gaps. Now we have this right here, a 4-hour fair value gap we can move lower from. So I would like to see, let's move this higher right here. I'd like to see this 4-hour fair value gap get potentially respected and see new fair value gaps lower like GBP. I like GBP right here. Looks very weak and obvious as to what it wants to do next. So keep an eye on that. 6A. Second, sorry. Let's turn on do not disturb right here. 6A, also quite bearish right now. Where can we reach towards to? Well, we have this premium array or discount array below price right now. Bearish bias right here. We're likely reaching towards that level. How can we get there? On a weekly, can we answer that question? No, there is no weekly fair value gaps right here. We're just expanding lower. Let's go to the daily. Daily, can we answer that question? Not really. We are not seeing any daily fair value gaps right here. Can we answer that question on a 4-hour perhaps? Yes, we can. Right here, 4-hour fair value gap. Pushing lower, creating a new 4-hour gap lower. Would like to see this respect and just push lower there, but in terms of something for me to play, it's not very high probability. So wouldn't look for trades there. Just understand that this is quite weak right now, actually, for in case you want to start pairing that up with some crosses right there. We won't go into crosses, but we need to understand what's relatively weak right here between the currencies so we can start looking at those crosses and pick some nice ones out if you want to swing those. But anyways, that is 6A, expecting lower prices off this 4-hour gap right here. Let's go to 6N. Looks quite weaker, actually. It is weaker. See what's happening over there. Monthly breakaway gap right here. We have just taken this premium discount array right here. So we just took a major level. See on the weekly if we're displacing below that on a weekly or daily basis, creating daily gaps there. Not really, but we are creating a potential weekly expansion phase right there. Let's go to the daily. And we don't really see anything right here on a daily basis to work with. So that we're not really seeing much here. I wouldn't want to go into the 4-hour here. Or lag. All right. 4-hour context already completed right there. So this right here would be something I'd just be patient on in terms of don't really know exactly where we want to push lower if we even want to, because we don't have any gap overlapping with this old low right now. We don't know yet if price wants to start displacing higher, rejecting it, respecting this array right there. I would be patient and just wait for new daily fair value gaps right here, or this new weekly gap. Once this forms, then that could be interesting for lower prices off of that, right? But just waiting for a little clearer of a picture there on NZD. We don't really have a clear array to move lower, not a clear narrative. Let's go to CAD, which actually looks the weakest so far off of everything, which will be interesting because I will show you guys one of my favorite pairs coming into this week on the crosses. I did mark one out of interest. So in terms of the monthly chart, where can we likely head towards to right now? Well, we have this monthly swing low, bearish bias right now, likely heading towards there. We have a weekly, monthly bag right here. Let me mark that up. Monthly bag, monthly breakaway gap, and closing below previous month's low, potentially creating a new monthly level right there. Let's go to the weekly. It's happening on a weekly basis, creating a potential weekly fair value gap right here as well. Let's actually just mark this level instead. It's a potential weekly area. Don't want to see this level get hit because this is just a weekly area of negation. If we do hit that, we remove the possibility of a weekly fair value gap, and we don't want to see that. So let's go to the daily. Let's go to the daily because if we want to continue moving lower towards this previous week's low, let's see if we have any arrays to do that from. We have a potential daily gap in the making, although it's a very small area to potentially make a gap. Is it likely? Not the most likely, but we're still going to watch that area still. Let's go to the 4-hour. Maybe there's a 4-hour fair value gap we can already move lower from. And this is that gap that we created, took context, respected that low, didn't expand lower through it. So what we may want to do is potentially consolidate here, create a new gap. But we'll see. Overall, I am expecting lower prices on CAD. We have been very, very weak. We just need some new context to work with. So potential daily fair value gaps here could be interesting on CAD. But keep in mind, this has been the weakest so far out of all the currencies. So again, I'll go into that soon, why that's important. And then Swiss franc futes. Let's delete everything right here. Where could we reach towards to? Well, let's mark the closest PD arrays we got right here on the chart. We have that swing low. Looks like price is drawing towards to. If we fail to offer fair value here, we're likely seeking opposing liquidity. Awesome. And we're creating opposing fair value gaps right here. Even greater, right? So order flows shifted bearish right here. We have a potential monthly fair value gap in the making right here. But don't expect price to retrace up there. We're very close to the drawn liquidity. If we want to move lower, where can we move lower from? Let's go to the weekly, see if we can answer that question. If we want to move lower, where can we move lower from? We have this weekly fair value gap right here, in which we already have moved lower from and took that weekly context. All right, so great. Well, we already just took context, so we're gonna have to look for new context. So let's go down to time frame, see if we can find it there. Let's mark up this new context, because what do we have right here? This is actually quite nice. We have a daily fair value gap. So now we have new daily context to potentially push lower down towards that monthly discount array. So this actually looks very clean as well. I'm just going to keep these on watch because those are my favorite. GBP, CAD, CHF. In terms of weakness, this one actually really has a nice, really nice setup to move lower right here. And this would be that push context down towards that level. So this looks great for lower prices. Very clean. I like it. Let's go to JPY. JPY, what's happening on JPY? Let's delete it all. Start from the beginning. Monthly fair value gap right here, pointing lower. Bearish fair value gap. Beautiful. So let's mark that up. Monthly gap. Now, this would be your target, right? Monthly fair value gap towards IRL to ERL. This is previous candle's low. And then if we want to continue pushing below that, we would go towards there because we failed to offer fair value on this leg. We're likely going to seek its opposing liquidity right there. So great. We have context. Now, we need to look for how are we going to deliver towards this level, right? Because we are going to deliver lower from this monthly gap, but we can't really play the monthly chart itself. So we need to look for lower time frame context. All right. We had this weekly fair value gap right here, getting disrespected. Perfect. Now we're likely seeking this liquidity right there. Let's look for the daily. What's on the daily? On the daily, we would like to see daily gaps, right? So we did see this daily gap. This is a breakaway gap right now. Don't expect price to retrace up into that. And we are creating a new expansion phase right here. So new daily fair value gap in the making once we print another daily candle, which would be really, really nice. But it's not there just yet, right? So let's see what the 4 hour, maybe the 4 hour already is showing signs of moving lower, already shows this 4 hour gap right here. Not bad. With an overlapping order block right there. All right. JPY looks really nice as well for lower prices. And this all, remember, it all makes sense and it's all nice because dollar has a bullish bias. Meaning if dollar is going to continue pushing higher, all of these should continue melting. So majors or currencies are looking really good going into this week. Can't lie. Bearish. I am bearish on these. So sweet. Those are the currencies. Now let me show you what I'm interested in because we know CAD is quite weak right there. When we look at GBP CAD from a monthly basis, where can we potentially move higher towards to? Well, we saw a very large monthly rejection candle right there. This is going to be lower time frame displacement. All right, likely seeking higher prices, drawing towards where the closest premium array would be this monthly swing high right there. So we would need to see if we want to move higher towards there, where can we move higher from? Let's go see what the weekly answers that question. And the weekly does answer that question. We have weekly context, weekly fair value gap. We can move higher from there. So now, perfect. This is pretty much where we stop because we have our context and we want to now simply, when the time comes this week, once price comes down into this weekly fair value gap, we would simply just wait for our confirmations, which for me would be an impulse shift. So 4 hour fair value gap displacing higher, and that is what I would want to see. Just a nice displacement, a nice aggressive V-shaped displacement, ideally right there would be nice. So that's what I'd be looking for on GBP CAD. Not bad. Now, I'm actually going to set an alert on that. And this is one of the cool indicators we have planned to be part of the upcoming private community, which if you want to sign up for that, this will all be included. So this is one of the neat ones where you can mark up a fair value gap right there, classify what kind of fair value gap you want it to be. Monthly, sorry, that's not a monthly, that's a weekly. I want to look for a 4-hour rejection, right? From a weekly going to a 4-hour, and we apply. And what that does is it creates that boundary in price, right? There's your weekly gap. Now you can set an alert on that. So we would go down to the time frame we want rejection on, pick here, add alert, 4-hour. There is the alert now placed, and you will see that alert right here. Pickle alerts, GBP CAD, 4-hour. Now we can delete this and just keep your drawings on there if you like. And once we get a 4-hour fair value gap out of here, you will get an alert on your computer, on your phone, saying 4-hour fair value gap created. And that just saves so much screen time. And literally, ooh, got an alert, 4-hour gap. All right, let's ride, let's take it. Right? Pretty sick in terms of making life easier for swing traders specifically. Now, again, let me bring back that indicator up. Let me just set some random levels to show you. You can customize it to wait for a fair value gap close outside the outside the IRL, right? So if you want your fair value gap to close outside, which I would recommend, it will tell you. But if you just want any fair value gap and that's like formed in here and doesn't close outside, well, then you have that option as well. All right, so just nice little touch there. But that indicator is a lifesaver, one of my favorites. And there's a lot more where that came from, which at the end of the forecast we'll go into some of them. But anyways, let's go into we finished this, so let's go into the futures. Let's go to the futures. Let me take a look at chat real quick before we get into futures, see if there's any questions, and then we'll get started on this right here. Uh-oh. Let's go over here. All right, let's see. So there's actually not much questions. One paid group, please. Not maybe in like planning in like 2 months, perhaps like February would be, if I want to give an estimate, maybe around there. DX week was buy. Yep. How do you decide between impulse shift entry and unicorn entry? I go over that in the course. What is this bullshlack? I don't trade the 4-hour. Do Nas, thanks. Oh, okay. Whatever you say, Master C. Whatever you say, you'll get, bro. Is gold dipping? We'll take a look. How do we get the indicator? So for that indicator, there's 2 options, right? It will be part of the private mentorship. It will be fully included in the price, right? You will get that as a just bonus for that mentorship, right? For free access to them. If you don't want to join the mentorship and you just want the indicator itself, there will be an option. We're working on this right now. There will be an option in the pickle jar, the free Discord, to just purchase it straight up, right? And pay a monthly subscription for that. So yeah, you have options. But yeah, I think that indicator is super neat, super neat. Is gold dipping? We'll take a look later. Can you go over that again later? The indicators. Yeah, we can go over the indicators again. There's a few more actually that are even sicker than that. I'm very excited for this. CAD JPY bearish for Valley Gap weekly. CAD JPY bearish for Valley Gap weekly. Let's take a look at that. Why not? It's on the red list. If JPY wants lower, then these JPY pairs, I'm not very confident in them wanting to also push lower, because remember, these move inverse. If JPY wants higher, anything XXX JPY, or if JPY wants lower, anything XXX JPY will move higher. So careful with that in terms of looking for more shorts here. Although the context, I will say the context is clean. So if JPY for whatever just reverses sharply, I don't see that happening, but anything can happen. Maybe it can get interesting, but really I would be careful, regardless of how clean that looks. I think something like GBP CAD is better because if we're bullish here on an XXX CAD pair and CAD is bearish, if this continues selling off, this should continue moving higher. Yeah, I'm gonna turn off those Discord notifications. I don't know what is messaging me right now. I'm gonna turn that off real quick. I don't know if you guys could even hear that, but yeah. All right. All right. All right, back to chat. Might be a silly question. There is no silly questions, Jag. But you consider dollar when it comes to indices as a way to filter out times when to press button? That's a great question because I actually do not factor in dollar into indices. In the past, I used to, and that really just confuses you more than helps you. And what you'll often notice is that, yes, technically, conceptually, dollar higher would mean indices lower, but that's not always the case. A lot of the times they will move in correlation or out of correlation. It's not a reliable indicator if you want to see it that way. So what I've done is just completely remove dollar from like any influence it has on my indices, and then just approach it like that, right? I really don't think looking at dollar is going to help you when you're looking at indices. It'll confuse you more. And yeah, like you said, it's a main thing only that I'm focusing more so when it comes to Forex. Yeah, more so. That's what I would focus on it. Oh, so you could hear the Discord alerts. Yeah. Yeah, those are all mine. Those are all mine. Discord should have a streamer mode that allows you to. Yeah, I mean, I just had to turn off the alerts. Anyways, let's now continue on to indices right here. So indices. Let's delete everything. Start from the top. Let's start with ES. So very simply put, we're fucking bullish as fuck right here. All right. There's no reason to look bearish. We are at all-time highs and just chugging along. So that's a very simple bullish bias on that. Where can we potentially head towards to? We could just head towards to this current monthly high. We have a potential monthly fair value gap getting created right here. All right, so that's good. This is a nice expansion. Ideally, we form this, so wouldn't want to see price retrace down into that, right? Because if we do form this, this shows that price is very intentional and should continue pushing higher. Remove on off that, right? So that'd be great if we can get that. Would not want to see it get traded into and remove that. So if we're going to go higher, where can we go higher from, right? Towards this weekly swing high right here. Where can we go higher from? Now, this should be a very easy answer that if you've been watching the forecast up to now, you should automatically just know and see. It should ring an alarm in your head. If we're going higher, where can we move higher from? And yes, I do want to see some comments. Let's get some activity here in chat. Pickle jar going away with your private group starts? No, it will always be there. The pickle jar will be forever. It ain't going nowhere. They will actually be in the same server, right? So I'll still be able to be around pickle jar. Shouldn't be a problem for you freebies. Thank you, Jag, the only participant right here. Yes, the weekly fair value gap. Shout out Jag. Jag is locked in. This weekly fair value gap, if you want to move higher, we can go from this. All right. Yes, it might be easy for some of you, but if you're new, it's nice to test your mind right here just to get you trained. But yeah, it was a very easy answer right here. Weekly fair value gap, push context. We're moving higher. We can move higher off of that. And this is a great candle right here where we're consolidating, just setting up price to very easily tap into that and move higher. So I really do like this gap. And what do we also see? What no one mentioned. Oh, actually, yeah, shout out Bobby and Dylan. They just mentioned it. And Omar. Yes, this weekly order block as well. Weekly order block as well. So we have a very strong level for price to move higher off of. If we're going to move higher, the only level we can move higher from right here is this monthly order block and weekly fair value gap, making it very easy. This is an extremely clear narrative as to what price likely wants to do next. Only one option here, right? Those give you the strongest narratives to work with, right? So beautiful here on ES. All I will do this week is wait for price to tap the weekly gap and then wait for my confirmations off of that, right? Very simply put, we could just stop our analysis right here for ES. Really, there's no need to go deeper than that. Same thing for NASDAQ. Let's just start from the monthly. Again, fucking bullish. There's nothing here saying we want to be bearish. No bearish arguments. We are just expanding right now. We do have this fair value gap below price getting created. That's great. And expanding above previous month's high. Also a bullish sign. And we just pretty much want to target this current monthly high. If we want to continue pushing higher, where can we push higher from? Let's go to the weekly. NASDAQ actually is looking quite stronger right here. So you see how this third candle on ES is consolidated, setting up a very easy tap into the weekly gap. This candle right here is actually showing a rejection right here, intention to already want to push higher. Still mark up this context. We can delete this level. That's just that monthly gap getting created. And again, we also have a order block overlapping with this weekly. Very strong level price can move higher off. So very, very clear context on indices right now. Now, what could potentially happen is, since the way this is setting up, where, let's go to the daily real quick, see what's happening there. We actually don't have a daily fair value gap right here. So that is pretty nice in terms of, if NASDAQ does want to come to the weekly gap, it wouldn't be the craziest thing to happen. What also is happening here is we swept this daily premium array. So this potential candle could start expanding lower and reach for that weekly gap. So that could be something interesting. Now, if NASDAQ doesn't do that and just continues pushing higher, we may see some SMT, some form of SMT in that weekly gap, where ES hits this weekly gap, NASDAQ does not. It might retrace somewhere around there and then continue pushing higher. That could be a possibility based on how this is currently set up. So keep an eye on that and just wait for those reactions. Like, wait for that institutional sponsorship to occur, because on NASDAQ this may not get retraced into. But we'll see. We'll see what ES wants to do right there. But very clear in terms of higher prices. We have our levels we can potentially move higher from. But yeah, NASDAQ looks good on daily. Bullish order block, displacement, propulsion block. I don't use propulsion blocks like at all. But yeah. Yeah, technically, whoever's saying isn't that a weekly bag? Technically, yes. But what makes a bag high probability is if there's a fair value gap in that third candle's range. Do you see a fair value gap in this third candle's range? I don't, right? So is the intention truly there to already want to move higher? I would argue it's not high probability in terms of it wanting to do that, right? So that's why I mentioned, well, if we don't have a fair value gap here, let's build a little argument right here as to why we might move lower. Well, we respected this premium array right here, right? And if we respect a premium array, well, price wants to seek discount arrays. So if that's a potential case, this could be the reason we start drawing towards that weekly gap. Now, again, I still want to look at ES to see, all right, are we going to form SMT? If ES going to shift, and are we going to get that shift on NASDAQ? And then we get the SMT. We'll see, because maybe ES just stings quite deeply into that weekly gap. NASDAQ hits that weekly gap, respects it very nicely, and we can just play NASDAQ. So again, it's a game of reacting. It's a game of reacting right here. Reacting and adapting to what price is likely going to do. But at the current moment, that's what I see. Immediate rebalance is high probability, brother. I don't use immediate rebalances like that, so I wouldn't look at that. Let's go to crude oil. So that's the ES and NQ idea. So let's go to crude oil. And already off the bat, it's gross. It's gross, right? Where can we reach towards to? Well, I mean, look at this right here. This is oh man, inside candle within an inside candle right here, right? We're not very clear in terms of what we're doing. We're progressively shrinking this range as we continue pushing lower or moving in time, right? So monthly, there's really not much I can gather right here other than currently this monthly candle looks like it's reaching for this premium array. So all right, if we want to move there, where can we move higher from? Weekly, again, gross. Lack of fair value gaps on the monthly, lack of fair value gaps on the weekly. Already, I would completely avoid this. I just want to analyze this for you guys, so you can understand what's happening here. But lack of fair value gaps show you low probability conditions, which we see that on the monthly, we see it on the weekly. We have no fair value gaps to work with, no order flow to work with. This is just in dead water right now. So it's not nice. But if we really want to force something, which I wouldn't recommend doing, we can still build an idea here, right? Because this weekly fair value gap, or this weekly candle, is currently expanding higher. All right, cool. Expanding higher, where can we reach towards to? We have a weekly swing high right here. All right, if we want to go to that weekly swing high, where could we go higher from? Well, do we have an idea of where can we go higher from on a daily? Not really. Well, we had this bullish fair value gap on the daily, currently a breakaway gap due to this intention already, just expansion higher. All right, so this daily breakaway gap isn't really valid in terms of, all right, we can go higher from there. All right, so if you really want to force something, we can go down to the 4 hour. Do you see something on the 4 hour? Sure, right? We have 4 hour bullish order flow. Sure, everything else has been really unclear. This is the first time frame we kind of see something worthwhile in terms of actual order flow and fair value gaps. And yes, if you want to push higher, we're going to likely push higher off that 4 hour gap towards that weekly swing high. And then again, this is chop. So what could happen is we just sweep that and continue chopping. Who knows? Moral of the story is don't touch this, please. It's not the highest probability thing out there. But if you really want to get a short-term idea of what's likely going to happen next, we may just push off of this to aim for that. All right, there you go. That's oil. Let's move that out of that. I do not want to be looking at that this week. Now gold. Let me take a look at chat real quick for a second. Please don't say my surname out loud. It's problematic sometimes. Bobby Weird Dick. Oh. You got me. Anyways, let's go to gold. Let's go to the monthly. Let's delete everything. Monthly fair value gap right here. Cool. We've been watching this for a while. Gold's been really weird though, regardless of how clean this monthly has been. What's currently happening on a monthly basis? We had this rejection candle. Great. This next candle should expand higher, right? That's our expectation when we see a respect candle like this, respecting the monthly gap. This higher time frame is lower time frame wicks, or sorry, lower time frame fair value gaps. Higher time frame wicks or lower time frame fair value gaps. So this is that reversal, that impulse shift on the daily time frame, for example. Now, if we're seeing that, well, we should be respecting that and expanding higher, which on a monthly basis, it looked like we did. We were expanding higher, but what's happening? We're seeing a fat rejection lower. That's not really what you want to see, all right? That's very, very suspicious, right? This next candle should have already started expanding higher, especially trading up here. Seeing this major rejection is very suspicious. So, and coming back into this weekly or monthly fair value gap potentially also suspicious. So we don't use monthly gaps twice. We don't use any fair value gap twice, all right? So if gold still wants to push higher, it potentially may want to seek this previous month's low, reject that, and then we get a 2 candle rejection to push higher, right? Because this first candle is failing to reject because this second candle is failing to expand higher. Now this might want to seek previous candles low and potentially push higher off of that, because we'll get a clearer idea once we go down to the weekly of why this looks so bearish. Let's go to the weekly. Let's go to the weekly right here and clean this up. Nice and neat right there for the eyeballs. We had this weekly fair value gap that is getting respected. We're rejecting off of that, moving lower. Let's move this back. And then we tried to push higher above it. We tried, but what happened? We were respecting these premium arrays. So what's happening on a weekly? We respected it, rejected off of it, came back, respected a premium array, rejected off of it. Just Every time bulls try to push this thing up higher, bears come in and just shut that shit down. Bulls try to push it higher, let's shut that shit down. Put simply. So the intention to really want to push higher off of this monthly fair value gap, is it truly there? Is it strong? Do we still want to ride on the idea that the monthly is going to push us higher? At this moment, I'm seeing more bearish arguments disagreeing with that and wanting to push price lower right now. I mean, look at this weekly rejection candle right there. This is going to be lower time frame for value gaps displacing higher off of that premium away. Can you believe that? Premium array right there. Likely seeking that discount array right there. Okay, cool. Now, if we want to move lower from this, where can we move lower from? Well, the story gets even more interesting here on the daily, because now we're failing this daily fair value gaps, failing to offer fair value. We're likely seeking liquidity right there. Okay. Again, just adding on to the bearish arguments. The more time frames we start looking at, the more bearish this is looking. Right? Remember on the monthly, it was like, okay, this looks pretty clear. You know, monthly context to the upside, bullish bias. Not exactly. That's why you have to look at the lower time frames, get a more complete idea as to what's happening. But this daily fair value gap is failing right now. All right. So if we're failing to offer fair value, we can go down one time frame right here and see if there's any 4-hour context to want to already start pushing lower. This is great, by the way. Let's mark up, first of all, what the daily arrays are doing. We have a daily breakaway gap. So we even have a bearish fair value gap formed as well. Add that to the bearish arguments list. It's just packing up right now. So daily breakaway gap right here. Let's mark that properly. Daily breakaway gap. Potential new fair value gap right here. Add that onto the bearish arguments list. Let's add that daily negation level. Top right. And let's go to this low right here. This opposing liquidity. Let's go to the 4-hour. Let's wait for that to load. Wait for that to load. Hey, have you guys noticed how the internet's been pretty fire this stream? In case you missed it, I am outside right now and in the backyard, and I get literally, I think, 10 times better internet than when I'm in my room. So I think we're just gonna have to do outdoor streams moving forward, because this has been a flawless stream so far. Moving into the 4-hour, we see, let's mark up the 4-hour arrays right here, which we can potentially move lower from. We have a very small level right there. We have a potential 4-hour getting created right there. So pretty much we'll just wait until we get new 4-hour context right here, and you can just start playing that down. All right, so gold looks quite bearish right here. Let's mark that up. Anyways, let's mark that. I don't want to see that on the daily. Let's go to silver, and silver actually looks way weaker than gold, much clearer. But anyways, if you want to short metals this week, you would want to focus on silver because it's weaker, right? Let's go into silver and see why it's looking weaker. Let's delete everything and start. No sound. Testing. Okay, no, I see the sound bar popping up. I think we're good. I think that's a PP. I think that's a personal problem. Yo, what's good, Volt? What's good, Volt? Anyways, let's continue right here. On silver, what is the closest premium or discount array, PD array we can head towards to? Well, we have this monthly, previous month's low right here. We have this previous month's low right here. Sorry. Previous month's low, this current monthly candle is rejecting right here. So this is likely going to be lower time frame fair value gaps pointing lower towards this discount array right here. Right? Just from this one candle, without even looking at what the fair value gaps in the lower time frame are doing, we already know what the fair value gaps in the lower time frame are doing. Just from this rejection right here, right? Because once we go down, you are going to see the fair value gaps are pointing lower. And there you go. Fair value gaps are pointing lower. right here on the daily. That's more so the wick I'm looking at. Fair value gap's pointing lower on a weekly. Right here, this fair value gap. Let's mark that up. So we have very, very clean weekly context targeting this low. This is previous month's low, and this is also just external range liquidity right here. Beautiful, beautiful. And this is amazing rejection we're currently seeing. This right here is going to be lower time frame fair value gaps pointing lower. And we know that without even looking at the fair value gaps, just by this one candle. So great context right here, looking super weak. All we need is, okay, where can we now move lower from? Let's look at the daily. On the daily, where's my ERL? Where'd it go? There it is, whatever. On the daily, we have a daily breakaway gap. Let's mark that up. Let's refer to it by its proper pronouns here. We don't want to offend any fair value gap, any gaps. That's a daily breakaway gap. So we don't expect price to come into there. Let's look at this third candle's range and see if there's any sort of fair value gaps we can move lower from. On the 4 hour, I see one right here, looking very, very nice. Let's mark that out time. We could already move lower off of this 4 hour fair value gap right here. 4 hour context looks quite nice. Would like to see this respect and move lower, eventually targeting that weekly ERL. I was looking for shorts throughout this whole leg right here last week, but we never got a damn retracement. It's just bag after bag, and you know, it is what it is. It's unfortunate, but we now have a new week, new opportunities. Not bad. Do you have a favorite UK politician? Do I sound British? Hey, bro, we gotta respect the gaps. We gotta respect the gaps and what they want to be called, bro. This is a daily breakaway gap. Anyways, nice. Let's go to copper. Why is it a bag? All right, yeah, I'll answer that for those of you who are not familiar with bags. The reason this is a bag is because this third candle expanded below this previous candle's low. Showing what? Showing intention to already want to push lower and not have to retrace up here to move lower. Already disrespecting this previous day's low means we're likely going to continue seeking lower prices off of that. And if we have fair value gaps in here, makes it a very high probability to move lower. That was in a nutshell. Let's go to copper, which is actually looking interesting as well. I don't look at copper, but someone mentioned it in chat last week, and I thought it was a pretty chart. So let's look at that. So what's copper doing right here? Let's mark our closest premium arrays or discount arrays we can target. All right, we got this right here, right below price. If we want to move lower, where can we move lower from? Well, we have a nice weekly fair value gap right here. Let's mark that up properly. Weekly FVG, currently doing a 2 candle rejection right now, sweeping previous week's high. All right, cool. We have context from that to that, from that array to that array. Now, if we want to move lower, where can we move lower from? Let's go to the daily. Do we have daily gaps? No. Let's go to the 4 hour. Do we have 4 hour gaps? Yes. Yes, we do. This is a beautiful, beautiful price action right here. Let's go with that. Sweeping previous week's high right there. Disrespecting the bullish fair value gaps, creating bearish fair value gaps, shifting order flow. So this is a 4 hour impulse shift. This would have been a great entry to short from. In fact, I was looking to swing short that, never got the fill there as well. And then we are creating a new fair value gap right here. So would like to see this get respected and push price lower. So that does not look bad. That does not look bad. And we'll mark that up on the short watch. So that is the copper futures outlook for those of you who trade copper, which I'm sure is none of you. But anyways, that is that. Looks not bad. And pretty much everything. Let's take a look at BTC. That's always fun, eh? BTC, just a clear push context off the monthly. Currently just pushing higher. All right, so we have a bullish bias here. If you want to continue pushing higher, we're from weekly gap, never retraced into it, and just pushing higher right now. All right, looks like we want to seek this high. How can we get there? Well, we had this daily gap and we had a great respect to it. Did we come into that? Yeah, that's beautiful, man. I missed that. Daily pushing up towards this level. All right, cool. Let's see, is there any 4-hour arrays we wanted to use to get there? Not at the moment. So yeah, still think we push higher, just nothing really to get aligned with that. But bullish, aiming for a new all-time highs right there at 104. Not bad. What's Pepe doing? Pepe just consolidating now. But we did complete that weekly context. We were looking at just beautiful, beautiful, beautiful. I got stopped out on this little retracement here. I trailed my stop and got stopped out. Literally, I got ticked. I got bottom ticked right here. I entered in this 4-hour gap. My liquidity stolen from me. I was the liquidity, and yeah, just ripped. But it is what it is. We're copper farmers now. That's damn right, Volt. My girl likes a bit of copper pipe, and I ain't okay. Or you use previously high longer to iron furnace, or you have additional ammo. You literally just saw how I did everything right here on the stream. I unleashed the clip right here, if you want to put it that way. Tom, you tripping, but yeah. Hey, so that's that. Do we have any questions? We looked at gold, Yaving Bura. We already looked at gold. And that is bearish. We have a bearish outlook on gold. And we went through a whole lot to get there. We really broke down gold very well. I think, yeah. This was a very in-depth stream. I'm not gonna lie. 200K or girlfriend? For the for the reason my girlfriend may be watching this right now. Girlfriend, you know I'd always choose you, babe. I would never go for the 200K over you. Come on now. Give me the girlfriend. Give me the girlfriend. But if she's not watching, give me that 200K. Did you already do currencies? Yes. Already went through that. So if you want to look at that, you can just go back in the stream. Do you swing trade, or do you focus on one trade based off higher time frame PDAs and chill? Do you focus on one trade based off higher PDAs and chill? Well, what I'm doing right now is intraday trading, right? So I'm intraday trading these right here, these commodities and indices, not copper. This is usually never on the list, so just ignore that. Just looking at that for a swing. But what I'm doing right now is I'm intraday trading right here with my intraday plan, and I am swinging on the side, or I'm currently opening my horizons, right? Because if you guys have been following me for a while, you know I was a primary swinger, a forex swinger, not a swinger. Don't get it twisted. But yeah, that's what I used to do a lot. Then I transitioned over to futures for plenty of reasons. Number one is the liquidity. The spreads are just way better, and I just focus on one session now, 8 to 12 a.m. and I'm done after that session. But what I mentioned is I'm trying to see if I can find a balance between intraday trading and taking some swings on the side. So that's currently what I'm trying to work on and see if I can juggle that. Because it's not too hard, right? I'll do my intraday trades, and then, for example, last week I was also looking at silver for a damn entry, or also copper for an entry. But yeah, it's not too difficult to juggle. We'll see. We'll see what I end up really doing there. What was university like, and would you recommend it? Honestly, I studied finance in university, but I really didn't pay attention because I was always trading, and I was always like, while I was in finance class, trying to study trading concepts and trading anything trading. So I would be locked in on my late trading stuff and really not know what the hell is going on in finance class. So regardless if I graduated with a degree in finance, I don't know if I could say I know a lot like, if I don't think I could work at a bank and do a good job, essentially. Anyways, would I recommend it? I don't know. Because like for me, no, because I don't really use anything I learned in university now in my day-to-day life or in what I do right now in trading. So it's different for everyone though. Right? Don't it's a different answer for everyone. But for me, like, yeah, no, I don't really use it much. Anything what I learned there. Feel like I would be a little more ahead if I just didn't go to university and went full balls to the wall trading rather than juggling those two at the same time. Moving forward, let's see. Make a beginner's guide. Yes, I will get into that once I have more time. But right now the focus is on a lot of extracurriculars right now, like making the course right now I'm working for you guys. That will be, by the way, free, included in the private mentorship group. That will be free along with all the indicators, which we'll get into soon here. Along with all the indicators that will be part of that, right? So just insane value being provided. Free course, free indicators, plus a whole lot of other things. Should be super cool. Very excited for that. You guys will love it if you do decide to go that route. No pressure. I would like a forecast like you just did. Can you summarize the steps? Yeah, I mean, I'm not going to summarize the steps right now. I mean, okay, I'll do that right now. Very simply put, we're looking for a bias, then we're looking for the narrative, and then we're looking for the context, right? Push context, for example, IRL to ERL. So always starting from the top down, always starting on the monthly, then working your way down to the weekly, and working your way down to the daily. And you don't really want to go lower than the 4 hour on these forecasts, right? Since you're just trying to get an idea of what the higher time frame is likely going to play out, what is likely going to play out like this week, and sort of just build expectations, build a watch list that you want to focus on. And yeah, that's pretty much it, right? You don't want to go very deep in terms of time frames on the forecast. Let's continue moving lower. Oh, you don't have to spam make a beginner's guide. You don't have to spam it. How to join mentorship. It is not out yet. Currently work on that. What was the indicator? We're going to get into that very soon. Let me just reach the end of the questions. Thanks for the stream, bro, and answering my question about university. I'm shooting off to the Jizz factory. What do you mean by that? What do you mean by that, Tom? Stay safe. Hey, man, stay safe, too. Have a good time. Bron GU, say bearish. We just swept a week. Okay. When it comes to journaling, did you journal all pairs or the pairs you're looking for? Well, when I'm journaling, I'm journaling the price action on my focus list, right? On what I looked at for the week. On terms of like, yeah, if I'm looking at NQ today and trading on a Monday, I'm only going to journal the NASDAQ price action because that's where my focus is right now. I don't know if I answered that question properly though, but anyways, moving forward, how old are you? I'm 23, my friend. 23, Lucas. I actually have the same name as you, except with a C. You have it with a K, which is pretty cool. I kind of like the way that looks with the K. I would like to forecast. Okay, yes. Just went through that. Every time I move my stop loss, it hits. What should I consider? Doak, I want you to reply to me. How are you moving your stop loss? On what basis are you moving it higher? What are the protocols you're moving it higher for? I want you to list that for me, and I will see if you're doing something wrong there. So get back to me in chat, and I'll see what you say there, because that's the only way I could really help you. What's your main model? Main model right now is the fair value gaps, impulse shifts, looking for impulse shifts, as well as the unicorn model as well. You've seen me use that a lot lately. I'm using a more of a hybrid model now, where I'm incorporating both types of entries. Any chance to mark up SPY? Yes, we can do that. Why not? SPY is very similar to just what ES was, except there's a whole lot of gaps. So I'd rather just look at it. Anyway, same thing, just bullish on the monthly, weekly fair value gap right here. So if you want to move higher, we can move higher from this gap. We actually tagged it on SPY. Why? It's quite interesting right here. But I would focus on what the futures chart is doing and just do my analysis there. I wouldn't really look at SPY and be like, uh-oh, SPY hit it first. Let's SMT on SPY and ES, guys. Let's go higher. No, that's not how I would do it. I would just focus on what the futures chart's doing. How many trades you average a week? I would say around 2 to 3. 3 is a very, very high end of that spectrum. Or let me put that better. 0 to 3 is what you should expect, right? I don't really see it that way. Like, I like to include 0 because there might be weeks where there's nothing, and it just sets your mindset and expectation right going into that week where I don't need to trade this week if there's nothing, but I can expect to trade or maybe around a maximum of 3. And if we don't get there, that's fine, right? Because I expect 0 to 3 trades a week. That's how I like to approach saying that. I'm back, bro. I had a turbo. All right, I don't even know. I feel like I should like time out you for a second. I'm gonna put you in timeout, Tom, because you're wilding, bro. Let's put you on timeout for 5 minutes, and hopefully you. Anyways, how do you identify a change in state of delivery? Change in state of delivery can be identified quite a different amounts of ways, right? We have our fair value gaps, like our impulse shifts. I made a whole video on that. You have a simple like order block closing above the order block that's stuck into the array above the order block's body. You have a market structure shift, right? There's some ways you can do that. The way I identify a change in state of delivery is with fair value gaps. So that's pretty much what the impulse shift is. It's a fair value gap coming in and out of a higher time frame PD array, right? Then that right there would be my change in state of delivery, because we're changing delivery from a sell program into a buy program right here, right? That's how I would classify that. Also, what you could do is unicorn. Unicorns are also change in states of delivery. That's not even a unicorn, but yeah. All right. As soon as I'm in profit, all I think to move to stop to break even. I think so much about not to lose. All right, so as I understand, Doak, for those of you who are not sure what Doak mentioned prior, he said, every time I move my stop loss, it hits, what should I consider? I asked him, does he have a protocol for moving it? And based on this answer, you do not, brother. So what you need is a systematic way of moving your stop loss. Rather than, as you said it here, you just move it to break even because when you're in profit, you think you have to move it to, like, I'm assuming, protect capital. You're afraid of losing. You just let the emotions get to you. You mentioned here you just think too much. So you want to really, the way you would move your stop loss is based on where should price not retrace to, not what are my emotions right now, right? It has to be based on price action. It has to be logical, obviously. Right, so the way I do it, without getting too much into that, would just be trailing. Well, whatever, it doesn't matter. We'll trail it on the order flow legs, right? That's how I move my stop losses. Once we have a new fair value gap higher off of this, right? We say impulse shift entry. Once we get a new fair value gap, well, now this leg is protected, and we move that low to that, right? And this is a great segue into the indicator. Let's take a look at the indicator, which actually trails your stop loss automatically. Beautiful. Appreciate you, Doak. What a great transition. Let's go to the 1 minute here. And this indicator is what we have been cooking up in the background. Me and the help of a very, very smart individual. Not sure if he's watching this right now, but if he is, shout out to you, bro. Absolute beast. He has created for us in the group, the private group, for the pickle jar, a indicator that automatically calculates your stop loss and automatically trails it and even sends alerts when it's time to trail. So think of that. Imagine you're in a swing and you close your phone, you forget to look at the charts, price moves higher, we get a new leg, and you need to trail your stop, but you have no idea because you're busy at the gym or you're busy doing some other stuff. Well, you get an alert from your phone saying new stop loss, new trailing stop loss. You open your phone and you trail your stop, assuming you can trade from your phone, or just get to your computer and move your stop loss. But anyways, the important part is that you will get an alert that tells you when you should trail your stop based on the order flow legs. Isn't that just insane? Like, that just really eases life up, right? Let's go take a look at that. For example, let's look at NASDAQ right here. Let's go to NASDAQ. And let's go to the 1 minute chart. Let's take a look at an example of, let's take a look at this example right here. Right over here. So let's hypothetically, let's say, that's not a fair value gap right there. Let's wait for a fair value gap. Here's the stop loss indicator right here. Let's move a little forward in time. Sell mode. Is this exactly what I want to see it? No, this isn't the price action I wanted to show you guys. One second. We'll get there. We'll get there. All right, so it was right here. This is the price action I wanted to show you this working. All right. So what happens right here? Let's pretend, hypothetically, let's pretend we just came into a 15-minute fair value gap right here. And you want to take the 1 minute impulse shift out of a 15-minute fair value gap. What this indicator will do is it will automatically calculate your position sizing in terms of how many contracts you want to take. And it will automatically calculate your stop loss, and it will put it either at the bodies or the highs. And you could determine either body or high on the settings, right? So if you want it at the body, it'll come at the body. If you want it at the high, it will go at the wick. Now, this is compact mode, right? We really want to see everything. We can turn that off, and we'll see all the stats right here. If you were to take a fair value gap entry right here at the open, you would be 82 ticks on the stop loss, one contract, or you can edit your size right here. So let's say we want to risk 500 bucks. One contract will get you $410 of risk, right? Because if you take two contracts, well, each contract is 410. It tells you right here how much one contract is worth. So if you take two contracts, well, now you're taking 820 of risk. So that's why it tells you one contract will be what you want to get your risk right here, somewhere near that. Okay, perfect. So let's say we want to take an entry here. We automatically know what to enter on. Sweet. All right. Well, we never get a fair value gap coming up into there, and we get a new leg lower. Now, what does this do? It moves the stop loss to the next recent order flow leg. Gives you all the information right here. Let's see if we ever get the entry right there. And let's say you get tagged in right there. Okay, cool. Now we're in a live position. Let's hypothetically just enter there. And let's see how this trailing stop works, right? Because like I said, we want to base it off of the order flow legs. Okay, new order flow leg, new swing low, swing high to swing low with a fair value gap in the middle. Look what happened. The stop loss is automatically trailed to that recent swing high. Okay, cool. Let's see if we continue pushing lower off of that. We get a new order flow leg lower. So now that's trailing stop loss comes to this low, or this high, with a new fair value gap in the middle. Okay, great. Let's continue moving forward. Price moves lower off of that. Okay, cool. Stop loss has now moved to the new leg, protecting that high, right? Because new order flow legs means you should move your stop loss. Okay, moving forward. Order flow leg, stop loss trails. Let's just zoom out and see what's happened so far. As you can see, stop loss has been trailed, and it shows you this nice visual of where that's been doing it. and eventually just continue pushing lower and lower and lower. Stop loss finally gets tagged out right there. Pretty neat, huh? Let's delete that. So in a nutshell, that's what that does. And you can set your alerts right here if you want to see that, right? This is a very 1 minute micro example. But if you want to do this on a swing setup, on a 4-hour entry, every 4-hour leg higher, well, now you have a stop loss. You will have a stop loss that will alert you when it's time right here. All right. So you could also remove the trailing stop line if you don't want to see that. You have some ways to modify this, right? Wick body. Also, this is pretty neat right here too. If you want to, let's go to this leg right here. Let's say you only want to see, because I only had buys, sells enabled. Let's say we only want to see buys. We could also see both if you want. Let's say we only want to see buys. Well, it will show you every single fair value gap, right? Which one you could enter from. We got the first line of defense, we got the overlapping line of defense, and every fair value gap in between. It will give you the risk from each one. All right. So let's actually go to the MNQ right here, because then we'll see that since NASDAQ has such a large position size or point per tick, you don't really get an opportunity. You don't have to get into this, right? 0 contracts, right? Because if you take 1 contract, you'll be above your desired risk amount. Okay, let's go to MNQ and you'll see how now these turn into valid levels. 4 contracts, 7 contracts, 13 contracts, right? Because there's some micros and I have an opportunity to actually play this with what you want. So if you really want to also refine this, you have the option to show the oldest entry. So it would show this old fair value gap down there. You have the option to show the newest entry. So it'll show the first line of defense right here. Just a bunch of options. And you could also just show all. And on the take amount, it's only supported for futures where it does that automatically at the moment. Down the line, eventually, potentially add Forex to that. But at the moment, it's only for these futures right now. And yes, automatically tracks the tick value for these instruments right here at the moment. ES, NQ, IM, gold, silver, and crude oil. So yeah, this is a very, very nice tool. So there was that one. We went over the Pickle Alerts indicator, which automatically shows you fair value gaps displacing away. Also, currently working on it. This is the sort of version 1 of things. All of these right here, fair value gaps automatically plotted on your chart. What these are right here, right? At the moment, we're working on putting all of this into one indicator, right? So let's see if that's plotting on the charts right here. Nice. Let's go to ES. Let's go to MES. But yeah, it'll automatically plot your fair value gaps. This is a very old version of it. There's a very nicer refined one where the fair value gaps are going to look like normal ones. It's going to be gray. It's going to be like exactly how I would mark my drawings. And also this will be outside of the box. Just overall nice refinement. Again, this is a very first draft version of it, but it'll mark all the fair value gaps on all the time frames. Whatever you want, really. You have a lot of options right here. Any of these fair value gaps would get marked up. So let's look at gold. Again, it looks messy here, but I promise what we're working on right now will clean up a lot of this. And it'll even tell you when it's failing, when it's being respected. Just some nice things to make life potentially a little easier. Let's close that though. But yeah, that's just a little sneak peek. It is going to get much better, and there's a lot more indicators where that came from. So yes, these indicators will actually be available very soon. Or thinking maybe in the next week or two, they will go live in the pickle jar if you want to get your hands on them. It will be on a monthly based subscription. And like I mentioned earlier, if you do join the private group, you will get them included for free as part of it. As long as you're subscribed there monthly, you will have a free access to those indicators plus the free course. So yeah, lots of cool and exciting things coming soon. Really excited for this. especially these indicators right here. Once they're combined and we get that new version out, it will be sick. But yeah, guys, let's look at chat real quick, see if there are any questions, any comments. Will it be free? No, sir. No, sir. It will be free for private group members. Can you look at sugar? What's the thing for sugar? What is that? Sugar futures. Sugar. I've never looked at sugar. Is this it? I don't even want to open that chart. I'm scared as to what I'll see. But yeah, guys, if there is no further questions, I'll end it. How long have we been going for? An hour and a half? Holy crap. Well, so much for keeping it short. But I think this was one of the best streams today. We went into depth on a lot of things. And lots of gems scattered throughout. Yeah, thanks for tuning in, guys. I don't see any more questions, so we're gonna start wrapping it up here. Yes, sir. Thanks for tuning in. Appreciate you as well, Jack. Thanks for popping in here. Hope to see you next week. Thank you, Jamal. Thank you for being here. See you, Doak. Thank you for being here as well. And you too, Frieza. Shout out to you. Have a great week, guys. Hopefully you found this insightful. We will be in the pickle jar this week looking for setups. I will be there with you guys, and let's have a good one. Appreciate you, and bye-bye.